I think it's time we talk about Xpeng, the Chinese electric vehicle automaker, again, because they're a company that competes with NIO, Tesla, Li Auto in the Chinese EV market, and they had a massive announcement that just came out the other day that they're going to be doing a dual primary listing in China. This is before NIO has done one. This is before Li Auto has done one, and many people are wondering, well, how is this going to affect the stock price moving forward? Is it bad? Why is Xpeng doing this when they already have $5 billion in cash just sitting on their balance sheet? So in today's video, we're going to go over everything you need to know about Xpeng right now. We're first going to go over the recent announcement with the dual primary offering. We're also going to go over why this offering is important. And then at the end, we're going to talk about the stock price moving forward and something very surprising between NIO's and Xpeng's delivery numbers. So if you enjoy this sort of content, all I ask is that you guys like the video, subscribe, and if you don't already have the public.com investing app, make sure to go ahead and follow me on that. You can buy stocks, sell stocks, and see exactly what I'm buying and selling in real time, as well as a full portfolio breakdown. Think of it like an investing app combined with social media. It is completely free to follow me. Use the code Michael when you sign up, and you'll get up to $50 in a free stock. But anyways, let's first start off by talking about this dual primary listing, what's going on here, why it's important. So right now, the Chinese automaker Xpeng is set to raise up to $2 billion from their dual primary listing on the Hong Kong Stock Exchange. And this is important because this is not a secondary listing. This is not that. This is a dual primary offering, which companies like Alibaba and JD.com have done in the past. And essentially what this means is that they're going to be subject to the rules and oversight of both the US and the Hong Kong Stock Exchanges and those regulators, which isn't the case for secondary listings. They have to create like a separate legal entity for them to list these as a dual primary offering on the Hong Kong Stock Exchange. There's a couple of benefits to this, like they'll be able to raise additional capital from institutional investors. It's going to keep them separate, but the main thing to keep in mind right now is that they are doing a dual primary offering. They're set to raise up to $2 billion from this, even though they don't need the cash at all. They have already $5 billion in cash on their balance sheet. So why is this important? Well, right now, the reason why this is important is because companies like NIO have not done a dual primary offering. They have not listed on the Hong Kong Stock Exchange, even though they have had the opportunity to. NIO and Li Auto can do a dual primary offering just like Xpeng, but Xpeng is the very first company to do this. And this is important because they have a sort of first mover advantage that they didn't have when they came to the US. NIO, Li Auto, all were listed before Xpeng in the US. And now Xpeng has sort of a second chance to get this first mover advantage. And why this is important, because with a dual offering, with a dual primary offering, or with a secondary listing, or whatever it is, when you're listed on another stock exchange in another country, it gives you the opportunity to raise more capital from institutional investors. It improves the company's shares liquidity and its public profile, because now there's going to be a whole separate legal entity for Xpeng that's going to be able to talk to the Chinese press more, talk to the Hong Kong Stock Exchange, and it's going to give institutional investors, really, this is the big part, institutional investors in China an easier opportunity to invest in Xpeng. NIO, Li Auto, they're based in the US. It's not as easy for the big money players, institutions in China, to get exposure to Xpeng. But either way, though, that's the exciting thing about it. They're going to have more capital raising opportunities. They can raise more money, and the interesting thing is they don't need the money. They don't need the money at all from this offering, because they already have $5 billion in cash on their balance sheet. So this is really just going to give them more exposure to institutional investors in China and what is going on there. Now let's talk about what's going on with the stock. So I first of all see a couple of benefits from actually being listed, doing this dual primary offering. The first is that there's always a lot of tensions going on between the US and China in terms of trade wars, in terms of regulations, and we've seen this happen with Alibaba. We've seen this happen with all the Chinese companies that are on the US stock exchange. There's sometimes tensions that come up, always the potential of getting delisted, and that's always there. So Xpeng being on the Hong Kong Stock Exchange gives them that sense of security, saying, look, they're still publicly traded. Even if they get delisted in the US, they're still publicly traded in Hong Kong. Another thing with them is that Xpeng has already been heavily involved with the government. And in my opinion, this is a great move for them to list on the Hong Kong Stock Exchange, because in the past, we have seen a $76 million investment from the government into Xpeng in March of 2021. We saw another $600 million investment from the government into Xpeng back in 2020. And finally, we also saw a major investment into Xpeng from Alibaba. It was $300 million from Alibaba. So we already see that they're heavily integrated into Chinese society in terms of institutional investors and in terms of government investing in them. So this is just a move, in my opinion, that's going to say, look, the government already wants Xpeng to succeed. It's pretty obvious. We see that the government has invested in them multiple times in the past to help them out. So it's obvious that the government wants them to succeed. And we all know in China, there's always a risk of investing in a Chinese company. But if I'm going to pick one, I'm going to pick the one where the Chinese government is really, really pushing for that company to succeed. They're doing the same with NIO. They're doing the same with Xpeng. It's like very similar, but we've already seen that they've invested close to $800-900 million simply into the company recently. And now let's talk about a couple of things, couple of catalysts, positive catalysts moving ahead that could push the stock price up higher. So since Xpeng stock reached an all-time high of about $70 per share, $72 per share, we had seen it consolidate quite a bit. We saw it drop as low as, you can see on the chart on the top right, we saw it drop as low as $32 per share, all the way down just below $30 per share. So we dropped 50%. Since then, we've started to recover, and now the stock price is sitting at $42 per share. But the couple of catalysts coming ahead for Xpeng is that they had some surprising numbers in May of 2021 in terms of delivery, and also their delivery numbers. So currently, Xpeng is continuing to deliver more and more vehicles, growing very rapidly. The thing that I like about them versus about NIO is that in May of 2021, Xpeng actually saw an increase of about 10% in their delivery numbers month over month. They saw a 10% increase from the previous month, and they delivered 5,685 cars. On the other hand, though, NIO saw a decrease of 5%, and they delivered 6,711 vehicles. So when you're looking at Xpeng versus NIO, the thing I like about Xpeng is that they have not had that monthly decrease. Yes, I understand there were chip shortages in China. There have been chip shortages all over the world for electric vehicle automakers, but Xpeng, despite all that, was still able to grow, which shows how much demand there is for their products and how much they're able to sustain and keep up growth despite challenges going on. And NIO, they did see a decrease. So that's one of the reasons why. Another thing going on with Xpeng is that they are already in 70 dealerships. They are in dealerships in over 70 major Chinese cities. They're planning to expand that network by 300 stores to 110 cities by the end of 2021. So they don't just sell their cars online, they also sell them at hundreds of dealerships across the country. And the other thing is right now, Xpeng is the leader in autonomous software. They have about 40% of their workforce who work in R&D and development, which is not common in many car companies, in many even electric vehicle companies. 40% of their workforce works in R&D, specifically for autonomous driving and all of their technology. This is important because we're seeing that they are leading the development for autonomous software for cars in China. This could be huge in the future as we start to see self-driving vehicles, as we start to see robo-taxis. Xpeng is ahead of NIO and really just up there with Tesla in terms of their autonomous vehicle software. They're trying to become the first Chinese automaker to reach level 5 vehicle autonomy, and this is looking very, very promising, especially since they already have 2.3 million kilometers in terms of miles driven with their self-driving technology, and they're continuing to grow that. Either way, though, with their new capital, the capital they're going to be raising from the secondary offering, about $2 billion, this is just going to add on to their $5.12 billion they have in cash on their balance sheet, and in my opinion, it's just going to help them get to that point even faster of reaching level 5 autonomy for autonomous driving technology. It's going to help them grow even faster, build out their second and third factories, and get those up and running so they can have more vehicles produced every year. They could also get their level up. They could get that even more of an advantage in the autonomous driving space, and they're going to have even more cash on their balance sheet. So they're going to have about $7 billion in cash, only $244 million in long-term debt. And in my opinion, they're in a great position moving forward. And I think a lot of people get distracted by Li Auto, get distracted by Tesla, get distracted by NIO, and sometimes overlook Xpeng. But let me know what you guys think. I hope you guys enjoyed today's video, and I'll see you in the next episode.